All right, welcome back to Street Smart. Let's get to one of the big corporate stories of the day, and this involved Hewlett-Packard. They have just confirmed that they indeed will buy Autonomy. That's a company that makes software. So a big story, $42.11 a share. You heard it first here on Bloomberg. We want to get more on this story because the company also talking about restructuring within the company, coming out with earnings, lowering its forecast. Let's bring in Shaw Wu. He's an analyst at Sterne, Agee Leach. Bloomberg, by the way, ranks him one of the best forecasters for the industry. He's also joining us on the phone from San Francisco. We also have our Jon Erlichman out there on the West Coast. Shaw, let me first bring in you because, all right, it's a done deal. Is this a good move for HP?
I would say for the longer term, yes. You know, they're clearly taking steps to transform the company to be more of an enterprise provider and also focus more on software and services. And you know, they're really trying to emulate IBM. You know, they're really just focused on corporate and not focused on consumer.
All right, and they're also apparently evaluating alternatives for the personal systems group. As Julie pointed out, they're talking about what to do with the PC part of the business. That's a big chunk of their revenues. Do you think it's good for them to potentially get rid of that business?
Well, if you, I mean, you're correct. It is about 30% of revenue, but it's only 15% of profit. Mm-hmm. And also, to put this in context, the PC business is actually one of their lower margin businesses. It has an operating margin of about 5%, and that compares to the corporate average of about 11%. So spinning this off would actually be accretive, you know, from an operating margin percentage standpoint. So that's probably, you know, why they're doing this.
Hey, I want to bring in Jon Erlichman here. Jon, talk to us about the transformation that we're seeing HP go through. Leo Apotheker brought in, obviously, from S&P amid a bit of a scandal at HP.
Yep.
Been really shifting things around.
He has. Look, he took over back in November, and the stock story in HP has been absolutely lousy. When he took over, this was a $40 stock, trading around $30, and obviously when it began trading after the news came out, after the halt this afternoon, it continued to slide. Look, changing this company is easier said than done. Remember that they still get about a third of their revenue from that PC business, and to go out and make the move to spin it off or try and find a buyer, that leaves them vulnerable in a lot of ways. But Matt, remember that also we saw a huge change in the boardroom, not just a CEO change. You saw formerly of eBay, Meg Whitman, come aboard. About 5 new board members, some who arguably were more aligned with Leo Apotheker, allowing him to make this kind of transformational move. Carol?
Jon, thanks so much. Hey, Matt, I know you want to jump into this as well.
Well, I have Mark Lehmann still here from JMP Securities, and I just wanted to ask you on a broader level. We've seen M&A action really not deterred by the volatile stock market, right? We saw that big Google Motorola acquisition. Now we're seeing this, a $10 billion deal. Do you think companies are going to come out and snap up bargains right now?
Valuations obviously have come down. You clearly see companies who want to grow and see growth in certain end markets. HP clearly doesn't have those end markets. You don't think of them when you think of tablets. You don't think of them when you think of cloud-based computing. You don't think of them in those growth markets. They're going to start thinking that way. So again, I think boardrooms are definitely going to be acquisitive.
What do you think about, and we can talk to Shaw about this as well, shareholders weren't entirely thrilled or didn't seem terribly thrilled with Leo Apotheker up until now. Does that opinion change as you get sort of a clearer picture of what Leo wants to do at HP?
I think that's going to take time, right? You go on a buying spree, you got to prove yourself. And they got to figure out what they paid for it as well, if that's enough or too much. And I think you're going to see that over the course of quarters, not the course of months.
Hey, you know, I'm just doing some fast math here in terms of what they're paying for Autonomy. $42.11 a share. The stock closed at $25.55 yesterday before the news that Bloomberg News reported about their interest in the company. HP's interest in Autonomy. That works out to about a roughly 68% premium here. Shaw, are they overpaying here, HP?
Yeah, I mean, in the near term, it does look expensive, right? It seems like it looks like it's roughly around 10 times revenue. But I think the way to look at this is, you know, what can they build from this, you know, over the next couple years? You know, this is an area where they're, where they're arguably weaker. You know, software, and there's frankly not a whole lot of assets out there. And Autonomy is one of the few larger vendors out there, and so yes, they're paying a big price, but we can't really grade this until a few years out.
And to that point, Carol, don't forget that HP spent $1.8 billion buying Palm. And what else did we learn today? That they've decided to basically get out of that business, that they're going to see if anyone wants to use their WebOS operating system, which they were hoping was going to allow them to make a big splash into the tablet market. But that hasn't worked out. And there, arguably, is $1.8 billion down the drain.
You know, one of my questions here is how much does Leo, now coming from Waldorf, come into competition with SAP? Obviously, HP wants to go head-to-head with Oracle in as many ways as it can, but do they now compete more with SAP? Are they now more on that level of the software service providers?
Well, clearly, that's what they want to do. They want to be less a hardware company, more a software company. So by nature, that is going to be a bigger move by them. Whether they can compete on that level, it's hard to sell short Larry Ellison, and SAP's got issues of their own. But it's going to be a more competitive field because that's where the growth is.
Hey, Shaw, let's bring you back into this. Obviously, the big news with HP is that they're doing this deal, but we also did get earnings. They lowered their forecast. Walk us through earnings just quickly, your takeaway from what we got in terms of their earnings release.
If you look at the results, the quarter itself was actually fairly decent. It looks like the server business, the enterprise business, actually did a little better than expected, and then PCs was actually a little light. And in terms of the guidance, it was below expectations, and that's definitely not positive. But obviously that's very reflective of the economy. But at the same time, you could argue it could have been a lot worse, and so things are definitely bad, but they're not totally falling off a cliff.
Hey, I want to ask you, John, what are you guys hearing? You got your feet on the ground in San Francisco. If they want to shop the PC business, who wants to pick that up? I mean, Shaw's just mentioning that the sales there coming in a little bit light. It's a rough market for PCs, right?
It is, and we learned that from Dell earlier this week, Matt, when they came out with revenue that was below expectations, and HP has even more exposure to the consumer part of the PC market. Look, it's too early to know, Matt, but a lot of people are saying, well, maybe there's a private equity firm or a group of private equity firms that would be interested in doing that, but it is very difficult to know at this point, guys.
You have some insight into this?
Well, I wouldn't say I have any brilliant insight, but a few years ago we were talking how poor the storage market is and how tough it would be for Seagate and Western Digital. And then Silver Lake goes in with TPG and swoops it up and makes a tremendous acquisition, re-IPOs it a few years later for a big profit. I'm not telling you who the buyer is. I don't know who the buyer is.
You're just saying
this is a business that's got a lot of revenue. It's got an operating margin. This is a business that is going to evolve over time, and somebody smarter than I am is going to figure that out and probably look at it.
All right, guys, we got to run. Mark Lehmann of JMP Securities down there on the floor with Matt and Shaw Wu of Sterne Agee breaking down HP, and also our Jon Erlichman out there in San Francisco.